Hello everyone, and you're watching Bitcoin Bubble News channel. Bitcoin can't be used as a world currency right now. People will talk about something different very quickly if Bitcoin goes up to $500,000. Since the price of Bitcoin has stayed the same, I'm going to talk about the long-term adoption theory for Bitcoin and where we are now. Will it become a safe place to store money around the world? What about a form of money that can be used anywhere in the world? What exactly is stopping it from becoming the world's most important currency? Also, stay tuned until the end because we'll look at well-known price prediction models like stock to flow and the new power law to see if they can help us figure out how much Bitcoin will cost in the future. How are you all? My name is Hurley and I'm the director of content here at Swan. I hope you had a great weekend off for Labor Day. Let us now talk about Bitcoin. As I said in the beginning, the Bitcoin USD exchange rate has been pretty stable over the weekend, staying near the 58,000 support mark. So I thought it would be a great time to look into the long-term game theory of Bitcoin from the point of view of money history. The natural process of turning things into money tends to go through four clear stages over the course of human history. They are often first bought as novelty items, starting with beads and shells and going all the way up to gold. All early forms of money were meant to be collected. The next step of monetization is very important because it's when money can be used by everyone to store value. This happens when other people start to value the collection more and more. It took gold thousands of years to become the most useful and widely accepted way to store value, which it still is today. Once a lot of people agree that money is a good way to save money, it can move on to the next stage, which is a medium of exchange and is used to buy and sell things and services. And the last stage in the history of money is the unit of account, which is used to price goods and energy all over the world. Check out Vijay Boyapati's great article from 2018. The bullish case for Bitcoin and Nick Szabo's long-form article from 2002 shelling out for more information on the past of money and how it came to be. I will leave the links in the text. A book called The Seventh Property was written by Eric X. He recently met with Peter McCormick to talk about these cycles of Bitcoin acceptance and where we are now. We think there will be about 3 main adoption rounds. As you can see, everyone has made an S-shaped adoption chart. They said, okay, we're this early, we're down here, we're before the early adopter phase or something, and I believe there will be about 3 main rounds. We are still in the first step, which is the store value phase. Because getting to this big of a market size as a store value is necessary for the next stages of growth. And we think that the technologies and structures that make Bitcoin a store of value today are the most important from the point of view of capital allocation. And guess what? They're going to take it to the next level so it can reach the middle exchange and unit of account type phase. And that's the same as basic service areas like ramps and banks. All of these boring technologies that make Bitcoin easier to use and allow people to keep value, like ZK rollups and other similar things. Yes, a lot of money has also been put into tools that help stores keep their value. I mean, I just met a really cool company today that combines private client services with a multi-sig wallet for a couple of reasons. Yes, that's right. So that's something we've seen a lot of. We've seen these multi-institution custody options that are becoming popular. A lot of medium exchange businesses have failed because there isn't a market for them. Okay, the market is coming though. Yes, we should know when we're getting close to it because it will be crazy. You'll see it in some of my work, right? We're definitely thinking about the next step, which is how I like to look at things. But from a business point of view, we're thinking about the present, what can be invested now, and what can be turned into money in 5 to 7 years. Everything there is mostly about store value type methods. If Bitcoin goes up to $500,000 or $1 million, I think that talk will change pretty quickly. Aside from that, it's really hard to say how big some of it might be in the future. H is right when they say that Bitcoin is still in its early stages of being used as a store value. Take a look at this chart from 2018. This needs to be updated right now. I believe we should put this, we are here star a few green diamonds below reliable store of value, but as you can see, we have a widely used currency and an easy to use measure of account. The finish line, where the winner gets all the money in the world. What is stopping Bitcoin from moving on to the next stage, which is a safe store of value? I would say that its high level of unpredictability is still a problem. Many people still see it as a very dangerous speculative asset because of how volatile it is. Sailor MicroStrategy is not being copied by bigger publicly traded businesses. This shows how early it is for Bitcoin to become widely used as a store of value. What Sailor has done with the company's Bitcoin plan looks great on paper, but I think that many C-suite executives see this and are still not sure that what worked in the past will work in the future. It's possible that Sailor just got lucky. It's clear that Bitcoin's price going up a lot will help the store of value phase get off the ground and may even help us move into the means of exchange phase. And having a lot less fluctuation. The instability is also going down. The BTC volatility measure has gone down a lot over the last 2 years, as shown in the chart at the bottom made by Joe Consorti. Now, I and a lot of other people think that the next 5 years will be very important for Bitcoin as it tries to become a widely used way to keep value. Just watch this clip of Howard Lutnick, CEO of the investment company Cantor Fitzgerald, talking about how the market is going to go up. I guess the best way to see where Bitcoin is going in 5 years is to look at where it was 5 years ago. Bitcoin has been on the outside of the financial world for the past 5 years, but it is getting closer and closer. There's an ETF that's just starting to become more popular, like dipping its toe in the public, but banks still can't clear it. Banks still can't do business in it. Banks still can't do business in it. Banks still can't keep it safe. Still, banks won't do business in it. And they still won't pay for it. People have the wrong idea about standard banks and other financial service companies. They want to do business with Bitcoin. They want to trade in new types of assets. Really nice of them, but they need the government to say it's okay first. Today, right now, right? Like in jail, if a bank held your Bitcoin, they would have to set aside the same amount of money. You'd say that's crazy, so well. That's the reason they don't hold it. But if you let them, and if the rules were fair, all the big banks and broking firms will jump right into Bitcoin. The process is slow and steady. There will be a CFTC chair who says, you know what, Bitcoin is a financial asset, and we're going to treat it as such. Bitcoin will move in a very strong and positive way when that happens. That's why I like Bitcoin. The price will go up a lot. It goes up and down like any other financial asset. But in the end, over the next 5 years, as it gets invited to this party, we're going up. Bitcoin will finally be held by institutions, banks, and even whole countries because of its good regulation, wide acceptance, and financial products like ETFs. Why do we think that the next phase will start in about 5 years? The Lindy effect may have something to do with it. To put it simply, the Lindy effect says that people are more likely to believe that something will last into the